Yes, I do think we're getting growth from all the main sectors of the economy. The services sector has led the recovery, but manufacturing is now contributing more. Construction is picking up, and so we are getting a reasonably well-balanced recovery. We're also seeing that some of the services that are doing well, like business and professional services, are actually benefiting by selling overseas. Sometimes people think of services as not actually selling in overseas markets, but some of the more successful parts of the services sector in the UK are exporting services and generating overseas revenue, and that's a good thing. We took emergency actions in the UK, and other countries did it, like the United States. In the euro area they did some slightly different things. And we did the right things at the time, but we now have to find a way of gradually moving back to more normal economic conditions, more normal levels of interest rates and more normal ways of operating as central banks. Well, I think the challenge for economies like the UK, which have gone down to a very low level of interest rates, is to move them up gradually in a way that people can plan for. And the danger of postponing that rise too long is that the Bank of England finds itself having to raise interest rates more quickly than it would ideally like, perhaps because inflation is picking up. So we should take advantage of the fact that the economy is now picking up, inflation is under control, to start the process of gradually raising interest rates. The benefit of starting early is that you can do things gradually. Well, there is a higher level of debt than perhaps we had in the early 2000s, but the household sector has been already adjusting quite a bit, and the debt ratio to household income has come down from about 170% down to 140%, and that will continue to adjust. I don't think the level of debt means that we shouldn't have any increase in interest rates. What it means is that we need to be careful about raising interest rates and to do it in a way that people can adjust to over a period of time and that they can plan for. I do think there are other things that the Bank of England can do, and they're being discussed. Ways of regulating the financial system so that borrowing doesn't get out of control as it did before the crisis. But I think we have to be realistic about the way in which we use these tools. There's no magic lever to pull. And I think having got interest rates to such a low level, I think if you gradually raise interest rates, that will have the effect in the housing market, I think, that people are perhaps looking for. In other words, they'll start to choke off some of the house price growth, which is, I don't think, a very healthy thing at the moment. I think the overall picture is that across the country now, house prices are rising at quite a significant rate. They're rising more rapidly in London at double-digit levels, but they're getting up towards double-digit levels on average across the UK. I wouldn't say we're in the middle of a housing bubble. I think we're on the threshold of one if action is not taken. And I think given that house prices are already relatively high compared with average earnings, it's in the interests of a healthy housing market to keep this in check as the recovery proceeds. I still think that they could do that. The first rise in interest rates could come later this year. There is obviously a process of preparing the ground for the first rate rise, and I think you've seen the Bank of England Monetary Policy Committee shifting its ground quite a lot since it produced its forward guidance last August. So things have already changed quite a bit in a short space of time, and I think in the second half of this year we could well see the first rate rise taking place ahead of the general election.